Okay, this morning we have Geoff Woodham from Nationwide Property Brokers and Paul Zalitis, Aussie Wrapper. Why are you laughing?
Of course,
of the wrapper.
because of the wrapper. I'm the wrapper.
Okay, so what's a wrapper?
A wrapper. I specialise in vendor finance. So a wrapper is someone that purchases a home and on sells it to the wrappee, which is the person that is going to purchase the home through the wrapper.
Structured finance.
Structured finance.
Okay,
Yes,
we'll talk
exactly.
a little bit about that. So, Geoff, when did you get into Nationwide?
My career in real estate started about 2 years ago, and historically I've been a business development specialist working around Australia, and when COVID hit I couldn't travel, so it was what can I best lend my skills to enter into a new, reinvent myself, and it was real estate. So started out with Elders and now with Nationwide Property Brokers, and I've found my tribe, and it's a great place to operate.
So what kind of properties do you sell?
I sell everything. I was born in the bush, so parents owned a property out at Orange. We had 1,000 acres out at Orange, and very comfortable in that space. But we sell everything from new blocks of dirt to build on, so estates, right up and down the eastern seaboard, from Grafton down to Newcastle and out to Dubbo, and residential, lifestyle and rural.
Okay, and investment properties, obviously?
Absolutely, investment properties form part of that package, and yeah, I mean it's if you consider when I started, at the start of COVID, when properties almost sold themselves, to where we are at the moment, which is a more challenging environment from a financing perspective. It's been almost like a journey on steroids. It's gone from one extreme to the other very, very quickly.
What do you mean by that?
Well, the properties, you look at Byron Bay, where properties have increased over that period of time by almost 360%. It's a massive increase in value, and you had 0.1% interest rates, so 1%. So and it's now 4.1%, and we might be looking down the barrel of another increase this afternoon. So it's a very challenging time, and people that have gone headlong and purchased properties are now having to sit back and analyse the next move, and people that are cashed up are looking for opportunities. So it's a vastly different position today than it was at the start of COVID.
So when it comes to investment properties, what do people actually look for?
Depends very much on their circumstances. And and I know that sounds like a bit of a cliche, but some people are after yield, and other people are after tax structuring to form a balanced property portfolio. So it depends very much on if you're entering the market or if you're an established player.
And I'm sure some of them go in for negative gearing? Absolutely. So is that a good time to do negative gearing?
Well, the higher the interest rate, the better the outcome for net gearing. It had minimal benefit when it was at 2, 3, 4%, but the higher cost basis you're coming from, the more advantageous it is. Yeah. So those circumstances change, very, very quickly, and you need to have some people are after flipping properties, so they will purchase a property, they'll dress it up, add value and sell it, and there are tax benefits and there are tax consequences, and people really do need to be informed and do their homework before they do anything with property. That's really important.
Well, you have a different view about negative gearing. Tell me about that.
The negative gearing is really, really good if you'd like to spend $1 and claim back 30 cents. It's a really great investment if you want to lose money. It's a great tax advantage, yes, I entirely agree, Geoff. But a lot of people now, with interest rates rising, are going to start to hurt. There's going to be some great investments out there, especially for vendor finance and for what I do. So I think there's going to be a lot of opportunities down the track, and I'd rather have positive cash flow
Absolutely.
than negative gearing.
So when it comes to investing properties, it's not just about negative gearing.
No, not at
like
all.
you say.
It's part of the formula, part of the recipe.
Yeah, yeah.
Yep.
So how else can people look at investing properties for positive cash flow, like you talk about?
For me,
Yeah.
yeah, absolutely. Well, through vendor finance, through on-selling your home that you've purchased through vendor finance, to purchase it, to on-sell it to people that can't possibly get a bank loan. They have been renting for years. They find it very difficult to get into a home, and this way they can get into a home. As an investor, you can be making positive cash flow each week, each month and each year through your investment.
Perfect option.
Yeah.
So property vendor financing is the perfect option, is that?
For certain investors, for certain purchases. You know, if you're looking at going from a rental, historically you've been a renter and you want to, establish a family, you want to sort of get ahead financially in a very, very challenging market. You know, I do feel sorry for, the younger generation at the moment trying to put together a deposit to, purchase their first property, and vendor financing is a perfect solution for that style of purchaser.
Yeah,
How does that work?
How does the vendor finance work?
Yeah, because Geoff mentioned that it's good for the purchasers who can't, afford the deposit or something.
That's exactly right. For people that want to get into a home, they have a lesser deposit. You don't have to go to a bank through all that rigmarole. There's a lot less, even though you've got to be able to qualify and you've got to be able to service the loan, at least it's a way into purchasing your home. It's the first step into home ownership. You're not renting, you're actually purchasing a home through vendor finance.
And there might be a whole raft of different reasons why a prospective purchaser mightn't be able to get bank finance.
Yeah.
There's a whole raft of different reasons. But, to have that option up your sleeve, a lot of younger people aren't aware of it. They're not as sophisticated and look at the options. They just think, okay, it's either bank of mum and dad or it's a bank, but a third option, and there are numerous others, is vendor financing.
So you said the purchaser, a lot of them are not aware that they have this option for vendor financing. So does that mean the real estate agent may be the one recommending it?
I don't think there are a lot of most the older generation would be aware of vendor financing. They wouldn't. They might not know implicitly what it, how to unravel it and what it means. But I had a perfect example the other day in a rural property where the purchasers, to compete to have the opportunity to purchase that property, only had so much money. But they knew that they had in 12 months' time more money coming in. So the option was, would you consider vendor financing for up to $200,000? And all of a sudden it came into play, and it was a viable option. And it was discussed, and it was it was risk weighted, and there was an interest rate attached to that risk management, and it was a consideration. Whereas if you didn't have that money at that time and you didn't know that you could enter into a mortgage financing, well, that opportunity would have just come and gone.
Absolutely.
Well, that's a good solution. And you said that many young people are not aware about this property vendor financing option. So, but it has been practiced for more than 100 years.
Absolutely, yeah. And it's just, it's the media. I think most people have just been conditioned to banks are the only solution / bank of mum and dad. So, it just needs to be discussed. It needs to be, as an agent, you're not doing your job unless you understand implicitly what the circumstances of the purchases are and guide them through options to consider.
So that's where Paul come in.
Absolutely.
So how do you get people to know more about vendor financing?
You go to aussiewrapper.com.au and you find out all about on my videos and explain. Send me an email, join my YouTube channel, all about vendor finance. It's a great way. I did a lot of negatively gearing property, but I don't anymore. I do positive cash flow through wrapping and vendor finance. And it's all about the Aussie Wrapper's complete guide.
Geoff, earlier on you mentioned about homework, that an investor should do their homework.
Absolutely.
Can you explain what kind of homework?
Wow. It's such a big question. You know, in my day-to-day work, I see a lot of people that have just started their journey in looking for a property, and it comes down to affordability, first and foremost. It comes down to, you know, the services that you are looking for, where the kids are going to school, if it's a younger family, you know, transport, is there a bus transport, is there trains? It comes down to whether or not people, you know, want to live close to the beach or they want to live out in a more rural environment. And until they start to ask themselves those questions and look at the affordability and look at a townhouse, a villa, a freestanding home, you know, it all comes down to doing your homework, and it's about getting out there, meeting agents, looking at properties and trying to finesse, you know, where they see themselves in that perfect home. Where do you start? I know when I started, you know, my property journey, it was in Seaforth in Sydney, and we bought the worst house in a really, really nice street. And over time we did it up, and it was a perfect example of, you know, what we could afford, where we wanted to live, and, you know, over time being able to afford to, you know, do the work that would uplift the value and then sell it and transition into a nicer home in a nicer position. You know, that's the journey. But everybody starts the journey through discussing it with mum and dad and people around them, reading a lot of, you know, media, whether it's the Fin Review, whether it's going online. But if you go into realestate.com and Domain, there's a wealth of information on there in regards to, you know, regions, and then drilling down into, you know, recent pricing, how long they've been on market, what a 2-bed has been selling for, what a 3-bed, 4-bed, time on market. All of that information is just a click away. It's online.
But those kind of homework are applicable to a purchaser who's looking for a home. How about from an investor perspective? What kind of homework would an investor need to do?
Absolutely the same.
The same?
Absolutely the same.
Okay.
It's really just drilling down into the detail and understanding the market. You know, you don't want to go into a market and be a, excuse the colloquialism, a wood duck and pay more than you have to. You know, it's more of a buyer's market today than it was 2 years ago. It was more of a seller's market 2 years ago. And, you know, you have to work very, very hard to negotiate an outcome to buy. And to negotiate is based on information. And that intelligence allows you to say, well, you know, if I stick to my guns and I negotiate hard through a transparent professional agent, and, you know, you're having good open dialogue, you know, you're more than likely to get what you're after.
Would you look at things like rental yield?
Absolutely, absolutely. Yeah, and you look at that yield because it's costing you money as an investor to borrow the money, and you need to explore all options that are available, and inclusive of wrapping, vendor finance, just to see what's the most suitable outcome, because there are options out there. It comes down to understanding the seller's needs and really investigating the seller's needs, and how do you do that through a good agent, and really getting a bit of a feel for, this is the perfect house for us, let's have some honest open dialogue and try and secure it and be fair. You know, I mean, if someone comes in and they're lowballing an offer, well, you know, the agent's going to say it's not even it's not even worth my time passing that offer through. They have to by law. Yeah. But you know, it's all about negotiation and having honest, open dialogue. Not all, but it's part of the formula.
Yeah. Paul, I read your blogs, and
Thank
it says the first step for investors is to do research, which is the homework Geoff was talking about.
Absolutely.
So from your perspective, what kind of research is necessary?
My type of research is to get out, wear out your shoe leather, walk the streets, is what Geoff does as an agent. If I see someone at the front of their house, I say, "G'day, how you going? What's the neighbourhood like? Is it good? Is there crime? Is there trouble?" Do you like living here? Don't you like living here? What's good? What's bad? Talk to me, and just get as much information, because the local people will tell you what's really going on.
So even as an investor, you need to...
Even as an investor, it's very, very important to find out, as Geoff said, what you're going to buy, what you're not going to buy, what's good, as a tip is for a wrapper is to never purchase a home near a laneway, because you don't know who's walking up and down the lane at 24/7. So that's just a little tip from the Aussie Wrapper about investing.
But mate, I've got to tell you, that's no true words. I mean, sometimes it's a totally different vibe during the week as it is to the weekend. Yeah. And you know, if you're really keen on a property, and as you say, mate, go and walk the streets and have a talk to the neighbours, and they'll tell you, usually when they're out, watering the garden or putting out the garbage, if you've got a reasonable dialogue just to sort of inquire as to what it's like living there, and oh my God, the bloody dog's barking at 2 o'clock in the morning. As an investor, you want to know that, because you want good long-term tenants and reliable tenants. So if you're going to do your homework and really understand that local area, doing your homework can not totally ensure, but it certainly eliminate a fair bit of risk in regards to getting good tenants, long-term tenants. Having a building next door, having a vacant block next door, to someone that a long-term tenant doesn't want something building next door, nor do they want someone that's partying at 2 or 3 o'clock in the morning.
Absolutely.
There's one other thing in your blog that says it's preferable that you buy a brick home.
Yes.
So, why?
Well, bricks is a good solid, most of the brick homes are a good solid home to purchase, rather than some weatherboards are good, but it's just usually a good solid investment in a brick home, is a brick home or brick veneer home. Yep.
The other thing you talked about is don't buy the property as an investor based on emotion.
Never ever purchase a property as an investor and as a wrapper and emotion. It's all to do with numbers. It's all to do with figures. If it's emotional, walk away and go to another deal, because you're going to pay far too much. And making money as a wrapper, you make money with a house investment when you buy, not necessarily when you sell. You do when you refinance, but you've got to purchase below the market value, so you can on-sell the home for market value or a little bit more.
Is it possible to purchase below market value at this time?
Absolutely. It depends on the motivation of the vendor. And if you've got a pressing situation where there's a divorce, where there's a need to travel at short notice, people need money they're not able to wait for the perfect outcome. You can buy it for under market value, and that's the market intelligence I'm talking about. If you understand the motivation of the vendor, you've got a pretty good idea of if someone doesn't need to sell, and they're happy to wait for the next 3, 6, 12 months, it's unlikely you're going to buy it for less than market value. But if you've got circumstances that prevail where they need to sell, and you're not going to be told that.
No.
That's part of the conversation you have with the next door neighbour. And the real estate agent's not going to tell you that.
No.
But if you understand the motivation of the vendor, you've got a pretty good idea of, I'm selling a property out at Dubbo at the moment, and they've had that property as an investment for, the best part of 5 years. And, there's no real, they'd like to sell, they've made the decision to sell, they're probably willing to, sit for 3-6 months, but ultimately they'd like to move on. They'd like to retain the capital appreciation in that property and redirect it into the next investment.
So Paul, for you, you are looking at people who are interested in investing in properties and doing vendor financing.
Correct.
So can you tell me more about what kind of people you're looking at?
I'm looking for investors. I'm looking for sophisticated investors, or people that really want to get into the next level of investing in real estate. Not negatively gearing, but positive cash flow. This is how you can purchase a home, you can buy a home and on-sell it to people that can't get a bank loan. They come in as home buyers, not necessarily home tenants. They're going to be purchasers of a home that they could not necessarily get into. It's a win-win situation. You're helping people get into the market, get into a home that can't necessarily get into it. You're making positive cash flow and you're helping them along the way.
So what do they need? They need to be cash rich, or they just need to be able to afford the deposit, or what do they need?
What's the perfect profile?
The perfect profile is someone that's already got a negatively geared property that wants to do vendor finance, or they've got the capability and they can get a bank loan today, or they're cashed up, ready to go to purchase the property. I guide them through my Aussie Wrapper's complete guide on how to talk to real estate agents, how to deal with the market, what to do, how to buy the house, put the perfect client into the house and then refinance it from the start right to the finish. I want to help people. I've done it. They don't have to do the hard yards. I've done all the hard yards. I've kicked the curb. I've had the sleepless nights. You don't have to. It's all ready to go.
So when you say start to finish, how long is that?
Depending on what house you buy and where you buy, it could be when you say start to finish, when you purchase the home, it's got to be a minimum when they get into the home for the banks, a minimum of 12 months. It could be 2 years when they refinance or go through the banking system. Yep.
Are there any interesting investment properties you're selling right now?
Yeah, listen, they come up pretty much daily. Whether or not it's a block of land. A lot of people bought land to build on 2 years ago. Mm-hmm. We're having an unbelievable backload of issues through various councils throughout Australia at the moment in regards to getting land, registered. And with the passing of every day, you bought 2 years ago for $250,000. Today it's worth $400,000 because you've had that exponential increase in value through COVID. Mm-hmm. But reciprocally, the cost to build has gone up significantly. Yeah. So are there good opportunities out there for land? Yes, because people have come to the realisation they can't afford to build on it. So, that's an investment opportunity. And whether it's a villa, townhouse, freestanding, property or rural, there's good opportunity out there at the moment. And there's one thing to have your own, as an owner, what you would like to get for the property, and there's another thing, and that is the market will tell you very, very quickly as to what they're prepared to pay for it. So, when those two pathways cross, you'll transact. But it is challenging at the moment.
Challenging to invest or challenging to buy?
Across the board. Okay. Yeah, across the board. And it's all about doing your homework. And it's all about having good, honest, open conversations with the various, people throughout the street. Could be next door neighbours, could be farmers. It could be going down to the stockyards and talking to buyers of cattle. You talk about rural properties. I sell a lot of rural. Cattle prices have fallen by 2/3 in the last 8 months. So, those changes in circumstances change the paradigm of owning property significantly. So, what looked very, very appealing 2 years ago, is marginal now. What you could actually generate from farm income 2 years ago today is different to what yesterday was different to what it is today. And, you mix that with climate conditions and what was, fantastic growing cereal crops in the last 2 or 3 years. If you could get onto the paddocks to harvest, we potentially are looking down the barrel of maybe a lot drier, 6, 12 months, 24 months, 36 months. And all of those conditions come into play, and it makes securing, your dream difficult. Because you never have a handle on it. The market changes minute to minute, hour to hour, week to week.
So if someone were to come to, who is interested to buy a property for their own home or to invest, how do they contact you?
I work with nationwide property brokers, and they can either get me online at Geoff@nationwidepropertybrokers.com, or they can call me on 0421 038 633.
And Paul, if they are interested in property vendor financing, they want to invest and make positive cash flow quickly.
Yep, they go to www.aussiewrapper.com.au/VIP or call 0427 123 105.
Okay, thank you, gentlemen.
Thank you very much. You can make multiple income streams a reality through vendor financing. I have made $307,000 doing vendor financing part-time. I thought owning investment properties through negative gearing was a good way to beat the tax man, but that's not true. Many who had gone through negative gearing had lost the opportunity to build monthly positive cash flow. After doing vendor financing for 30 years, I wanted to share this knowledge with you so you can start creating your own positive cash flow. The Aussie Wrapper's Complete Guide is all of my knowledge and expertise put together to help you beat the negative gearing rat race and build yourself a positive income stream. So grab the Aussie Wrapper's Complete Guide now at aussiewrapper.com.au/VIP. Here's what you get with the Complete Guide. 1. You get a complete guide folder with all the guidance you'll need to build positive cash flow through vendor financing. This is a wealth of my knowledge and expertise collated and updated over 30 years to give a really good head start to property vendor financing. 2. A discovery call with me to answer any questions you may have on vendor financing. 3. 6 PDF courses emailed to you fortnightly. 4. Email support in case you have any questions on vendor financing. 5. Industry contacts so you can get all the support you need to wrap a house successfully. 6. 7 Biggest Fears DVD. All heroes need assurance, so this is a good motivational piece. 7. The Australian Wrap Report, which gives you the insights, tips and tricks to vendor financing. I want you to create positive cash flow and wealth at the same time helping others who get rejected by the banks to own a home. It's a win-win situation. Go to the aussiewrapper.com.au / for the complete guide. I'm here to help you create wealth, so jump on. See you soon. Paul Zalitis and I am the Aussie Wrapper, helping you generate wealth.